Hey traders, TG Watkins here. It's November 5th when I'm recording this. Hope you guys are doing well and surviving this chaotic market. It's been a little bit tough, hasn't it? So we're going to go through basically a state of the market. I'm going to show you guys a bunch of charts and seasonality and some other kind of behind the scene things that we don't normally see that should help you kind of understand what is happening with this market and where I think we could be going into the future. Just remember, if you guys are interested in what I do, simplertrading.com/Moxie is where you can find out more information from me. And we're always running a $7 trial for 30 days if you want to come into the trading room. All right, so let's just kind of look at this for a little bit. If we look at the SPX, it's kind of like business as normal, isn't it? Really no big deal. It doesn't look bad. We had a pretty big move up over here, and we have since pulled back over the last few days, which I think has been very expected. This kind of move right here, very expected, and we're really just right back down to the daily 21, and you can see here we're also retesting this breakout support level. So that looks fine, doesn't it? And then if we look at something like the IWM or the RSP, maybe a little bit different of a story. You can see it's been pretty choppy. And in through here for the last week or so, you can see the market has come down quite a bit. We finally bounced today, so that's nice. And then you start getting into some of the other antics that are actually happening out there. So for example, let's take a look at Ethereum. And this is where you start seeing some of the divergences from the rest of the market, because now you can actually see that over the last week, right there, that is a big move to the downside. I'm sure you guys have probably been seeing some of this out on social media and people talking about it. Ultimately, I think this is going to be a good thing, because if we come over here and we look at the higher time frames, look at what just happened on Ethereum. It came down and tested the weekly 50, the weekly 30, and the monthly 10. I was kind of hoping that this thing was going to be a little bit stronger and actually hold the weekly 21. I guess not. And so we came down here, and now I want to see if we can actually get the thing going. Now, remember, I think that part of what's been happening, because there hasn't really been much news that has driven this down, I think what's happening is part of this is along the lines of the government shutdown situation. It's been going on for 36 days at this point. It is now the longest government shutdown. There could be some, well, obviously there's politics being played in this, that's the whole deal. And now we are past the elections. And I think that that is part of why we have bounced, is because I think some liquidity has been drying up, and that's why we could see in through here, they finally just rolled this stuff over and really sent it down, but today it bounced back, and it happens to be the day after the elections. Interesting. So let's take a look at a couple things for that. If we look at this chart, this is showing us the TGA, the Treasury General Account, and what you can see here is in the green. That is when you have a lot. There's a lot of funds in there. And you can see that they release the funds. You're putting liquidity into the market because the money is coming out of the treasury and it's going into the market or into the economy or wherever. And that's where you then see, say, Bitcoin start to move up. And we're kind of in that same situation where since the government has been shut down, the TGA has been filling up because, well, the government's shut down. They haven't been able to get the paper out. They can't send checks, get the money out, the liquidity. It's just been all tied up and hasn't really been working. And that's why you can see that Bitcoin has not been going, Ethereum has not been going, and we've actually seen underneath the surface a lot of stocks, kind of the risk-on stocks, have been really getting hit and moved down, especially over the last week, maybe even 2 weeks. And I think this is part of it. So what I want to see is, basically what I'm thinking is the next situation should be that the government shutdown gets resolved. They finally negotiate for whatever it is, and we want to see that the TGA funds start to come down. That'll provide liquidity, and we want to see risk-on assets start to move up. So that's going to be one thing. We can also look here at M2 money supply. And it has been climbing for quite some time. In fact, this is a rather large divergence. I am surprised that we have that much of a divergence, but you can see that money supply continues to go up and some of the risk assets have not. So like in this case, Bitcoin and think Ethereum. So I think that this could also help whenever the market finally gets going, and hopefully the government shutdown situation is going to be one of the things that helps resolve that, and then we can start seeing Bitcoin and Ethereum and whatnot start to head up and start matching the M2 money supply. A couple other things we can look at that might be pointing towards we finally hitting a low. This is the fear and greed index. You can see we are now in the extreme fear, and the previous close was even more. It was 22. This is currently 24. So we're down in that area. And yeah, this is pretty much pegged. So this is this is good. We want to see that this thing come down. Usually when we get down to the extreme area, that's a capitulation, and then we can start seeing this thing come back up. And obviously we're nowhere near greed, so I think we have a long way to go from fear into greed, and that should hopefully carry us into the end of the year whenever the market is ready to go. So now let's take a look at some of the seasonality and some of the stats about what to expect for the next few months. We can look over here. Now, October, yeah, usually a little bit bullish by the end of the year, okay. There are some stats that show October being a little bit weak too. I'm going to take it as a little bit more neutral in the fact that we actually had October as being slightly up, but the real key is we want to be looking at November and December, which are some of the strongest months, okay. So this is what we want to be seeing in through here and seeing some strength in through that one as far as seasonality. We can also look at it this way. Now this one I know that's a little bit old. I couldn't find a current one, or at least it's on my other computer, but this is still going to be telling us the same thing. We know that the last few months of the year are going to be the strongest, and that's what we're kind of waiting for. And one way to kind of look at this is the fact that the market, the S&P just pulled back to its daily 21. The IWM has been pulling back. We got a lot of carnage underneath the surface. If this market goes up, if the government reopens, if we start getting the funds and the money and the liquidity flowing, then I think we've got a really nice deep base for things to rally from. And I think everyone's kind of waiting for it. So, let's see if we can finally get it. We don't want to jump in too soon. That's kind of been the problem for the last few weeks. Like now we are into November. Everyone's kind of looking around, being like, all right, what's going on with this? Why isn't it doing it? And I think that the market is getting ready and waiting for a trigger. And then you can see here, this is another example of kind of what we're seeing for seasonality. The year-to-date return at the end of October, if it's positive, which it was, very positive, then these are the returns in November, December, and basically the last 2 months of the year. And you can see that they are all pretty much up and up and up. It's a 95% chance that it's going to be higher. So that's also a really, really good situation that we can deal with. The question is, how high are we going to go? Now, if we do happen to go back to, if we look at the SPX, Tom Lee and some other people have been kind of projecting, originally it was 7,000, 7,100, and now some people are starting to raise their projections. I mean, they're talking about 74, maybe 7,500. I don't really know where we're going to go necessarily, but what I can say is that there is no way we're going to be starting the end of year rally from up there. So even I have been looking for the market to come down. The real difference is that even though you're seeing a tiny little pullback here, underneath the surface, a lot of stocks have been pulling back hard. And as I showed you guys, looking at crypto and Ethereum, that has been a pretty drastic show of the difference of what's kind of been happening above the surface and below the surface. And I'm starting to see some clues that we could be bottoming and start moving up, and at least we're moving up from this condition right here. I think from that support to that support, I think is actually a pretty good case. So I'm still bullish on the market. Yes, there has been some real carnage underneath the surface, but I think we should have a good run into the year, and we're just kind of waiting for that to actually kick off and get going. All right, guys. So thanks again. Hope you enjoyed your time. Remember, come over to simplertrading.com/Moxie, and this is where you guys can come in. $7 for a 30-day trial if you want to come check it out. And as I said, we should be having a pretty good run into the end of the year. We just have to get the timing right and don't want to jump into it since this market has definitely diverged from the strength and the weakness. All right, guys. See you soon.